So oil just got a lot less control because the UAE left the OPEC, right? And now I expect most investors are going to be getting this wrong. So here's what's happening. If major producers like the United Arab Emirates start acting independently, instead of being part of the tightly controlled and coordinated OPEC, the oil market will change. Not necessarily higher prices, not necessarily lower prices either, but definitely more unpredictable prices, okay? And that's the key shift most people will miss. This is no longer just an oil going up story, right? There's a volatility story, and volatility changes how you should invest, right? So first, we should stop blindly buying energy stocks. Big names like ExxonMobil and Chevron Corporation are no longer simple inflation hedges, because if oil prices swing more, the earnings swing more. So chasing them just because oil is in the news, that's not really good strategy, right? Secondly, if you are in energy, focus on the lowest cost producers. Companies like EOG Resources or Pioneer Natural Resources can survive price drops and still stay profitable. In a messy oil market, efficiency will beat size every time. The third point is, and this is probably what most investors might miss, if oil stabilizes or even drops a little bit, the rest of the economy will benefit, because lower fuel costs will help airlines, logistics, manufacturing, and even consumer spending. So some of the best opportunities might actually be outside the energy domain, right? So one last thing is that this is not really an oil story. It's an inflation story, because oil feeds directly into inflation, and that drives the decisions from the Federal Reserve, right? So don't just ask where is oil going, start asking what does unstable oil mean for everything else, right? That's where the real edge is going to be. So happy investing. Bye now.